interpreter this morning is Esther Kendi. In studio, we are joined by, let me call him an expert in extending and capitalizing on that shilling that you have and stretching it a further a mile. And this conversation, we are calling it Money Matters, and we are going to be talking to you about investing and how you are able to grow your money. The gentleman in studio, he is from Nabo Capital. I'm going to give him an opportunity to introduce himself, and we take it right from there. Mkubwa. Karibu sana. Kindly introduce yourself. Tell us what you do, and we'll start the conversation.
Thank you so much, Alan. My name is Moses Njuguna. I work with Nabo Capital. So what we do at Nabo Capital is to invest your money to create for you a tangible wealth, and whatever you have, maybe in form of savings, we help you to grow that money. So, and we have a goal to make sure that this money is working for you, and to help you meet your daily needs and even plan for your future. So that's exactly what we do. With my experience has been for over 10 years, working with the client, developing for them investment strategies and more on the financial planning journey. Because investing, it's a product of financial planning. How you were able to plan your money, and how you're able to invest that money. Yes.
You know, I'm just going to dispel it, right, and just jump into the deep end. When you talk about investing, kuna msana fikiria kubai nduthi, kuna msana fikiria kubai kashamba mahali, kuna msana fikiria. Exactly from an expert's point of view, can you break down investing so that somebody who is watching is able to understand this big word? Oh, I'm an investor. What difference is between me here, who is at Science TV, and an investor? Is there any differences? Really, what is this big word, investing?
Thank you. So for investment, it's simple. It involves three things. And one, we say it is a commitment of your financial resources to an asset with a given period of with an expected return for a given period of time at a given level of risk. So you're talking of you have to look for a period of time whenever you're committing. It involves your money. When you talk of investing, this money you're committing it to an asset. This asset is able to generate for you a return. You have an expectation of getting a return, and then for a given level of risk, that person who is buying the nduthi, you're committing your 80,000 or 100,000 to this nduthi with an expectation this nduthi is going to generate for you an income. Of course, there is a risk. At some point, you've seen there is an accident. You have to get an insurance to cover yourself. Of course, it can be stolen. So there is a level of risk in anything we're doing. And then there is this investor who says, "Mine, I do farming. I do agriculture." You are committing your resources to this farming. You've kept maybe cows, or you've planted whatever. There are risks that are involved. Your crops may not do as you expect. So there's a risk, but also you are giving yourself time. You are planting things and you're saying, "I'm planting these crops for the next 1 year. I'll get a return by the end of the year." Many things happen in between. And there's also now the capital investor, someone who comes now to the financial market and says, "I have a 1,000 or I have a 5,000 or I have 100,000 and I want to commit this to an investment where I get a return for a given period of time." So investment, you have to talk of return, because of the money you are committing, you need to be compensated. You need to talk of the time. This thing of being told that you can get rich overnight, you can put your money, double it in a day or two, that's a lie. So you have to give yourself time. The other thing that you need to put is the level of risk. The risk, what we mean by risk is the likelihood, the is the level of risk. The risk, what we mean by risk is the likelihood, the outcome you're expecting may not come. If I'm expecting to make a return, what is the probability that I may fail to make that? That's the uncertainty that is there. And we have different types of risk. One of the risk in investment, we call it a systematic risk. Systematic risk is something that comes and affects everybody, like COVID. COVID came, despite how
it don't spare anybody.
It don't spare anyone. You are in the hotel industry, you are in the media, you are in transport, you are everywhere. It cuts across.
Affected, yeah.
And even when you hear the fights that currently you're hearing that are happening, if you have a business in there, it affects you.
Yeah.
So there's no much you can do about that systematic risk. Then we have another risk, we call it unsystematic risk. And systematic risk, we also refer it as a diversifiable risk. You can diversify. And what do I mean by diversify? You don't hold all your eggs in one basket. That's what we mean when we talk of the diversification.
Yeah.
Such that if my business,
here you put that
yes, let's take this farmer who has a shamba and has crops. What else can this farmer keep? They can keep livestock. What else can they keep? They can keep chicken. In case there are factors that are affecting the crops, definitely on the livestock or on whatever, there are things you have done and you're able to, in case one is not doing well, another one, in case there is no good market for your potato, there's maybe a good market for your milk. There's good milk for your eggs. Of course, there are market dynamics and all that, but what I'm saying is you don't commit all your resources in one investment. You try to diversify. Yes, that's the investment. And including the people in the business. Of course, you find someone has a business, maybe is in printing. What else can they offer? They do cyber. They do, that's trying to diversify your income. You're not only relying on one source of income, even as a business or even as an individual.
But then these investment gurus, they would come and tell you a master of too many then is a master of none. But now you're telling us diversify your investments. Then how are you able to balance?
Like now from the investment side, when we talk about portfolios. And portfolios is just a bundle of assets that I put together to earn a return for my clients. So I know there's a level I can diversify and it doesn't make sense. You over diversify, you spread so much. You like, even when let's say you're buying stocks, you're buying shares, you buy this share of 10, maybe you have shares of 10,000 here, you have another one for 20. You have bought so many. In case one is increasing, you're only getting some small margin. So there's a level of diversification. And even when you're looking of having a business, check which you can grow organically in the business. If this line I'm offering, what else can I offer? But don't overstretch yourself, because in the process, then you realize there's what we call diminishing economies, diminishing returns. Diminishing returns is, yes, you make a return to a given level, and then they start falling. So it's, you've been growing, you have diversified, then you start coming down. Then at that point is when you need to understand something we call divesting. Divesting is which streams of whatever do you need to close and consolidate your business.
Your income.
So if you realize you are overstretched, the business one is not doing well and all that, and you have all this running, the overheads is too much, which one do you close to concentrate on the profit making? So at the beginning, of course, understand your core business. What else can you add? But as you are growing and you feel, of course, you have to keep on monitoring. Whatever comes as a cost center, you have to let that go. So, and you have to do that. And investment, we talk about time. When you realize this is taking money from me, you don't keep on feeding that channel, and you have to keep on. You close that and concentrate on the main one. So there's always that monitoring. Over diversification, maybe even when we talk of the stocks, we tell you about 3 or 4 shares that are good company, you can own that. And there are different approach. If you are investing in the stock market, you know this is a growth company. I'm buying this share for what we call value. And I buy this share, I know I have value, I'll be getting dividends. If I'm buying a smaller company, I know this company has a potential to grow, and I give it time. So you don't overstretch yourself so much in the name of investing. So whatever has worked for you, just see what you can add, but not too much.
Interesting. We went so quickly into the deep end, but I want us to backtrack a little bit and go to where the story begins for Nabo Capital. So how would you describe Nabo Capital's mission and approach to investing in Africa?
Thank you. So Nabo Capital came at a time when most of the people, actually let me start with the name Nabo. Nabo Capital is an African, it's a Kenyan Maasai word, which means number one. And number one, and why? Because we look to our aspiration to become number one investment firm in Africa. So we invest in Africa. And when we started this journey, back in 2013, there were many investors that were coming. You realize they're foreigners. But we didn't have a local company that is helping people now stretch from Kenyan market to African market. So we even got the name NABO. And when we checked on the African market, we realized the margins you're able to make. We had a strategy called quoted private equity in stocks in Africa, and this strategy was doing so well, and many people wanted to be involved in this strategy, but we could not do it as at a private level. It was a subsidiary of the Centum Group. We had to get a license from the Capital Market Authority to operate as a fund manager. So since 2013 is when we got the license with the Capital Market Authority and Retirement Benefit Authority. We offer pension services. So when now we started, we are looking in the Kenyan market and Africa, and what you realize, and one of the conference I attended like a month ago in Casablanca, we were looking on the solutions for Africa, and we realized, one of the things we realized, we have so much potential, but our challenge is we expect help from outside. So much from outside, we don't realize the potential we have. How can we come together and even look our pension industry to fund our infrastructure in Africa? We have companies that are doing that in North Africa, that are using the people's pension and are investing in Africa. So you realize one advantage, we have a young population, well trained, well skilled. If we concentrate and look into Africa alone, we can be able to create jobs within Africa. And you look on the margins, when you talk of the returns, why do the foreigners focus a lot in Africa? Why do the foreigners become the movers in our Nairobi Security Exchange? There are huge margin, there is huge potential. If we create our own funds that are investing here locally and also in Africa, like the word here is collaboration. How can the East African can collaborate and like invest in our infrastructure? Have funds like pension, which are long-term, that can invest in these areas. Have investment funds that can give a returns. You can get a returns between 10 to even 15% or even 20% in Africa. Which when you go to the advanced economies, you realize you only get 3%, 2%, because of course the development, the advanced and all that. Here we need the capital. The capital is needed. So if we're able to create the capital, the opportunities are there. So that's the journey. We started investing in Africa in 2013. So we have funds that invest outside Kenya and like in Egypt, West Africa and all that, and there are funds that also invest in Kenyan market, and also we do a lot also in Eurobonds.
Interesting. I want us to put a pin in there and go for a short break. When we come back, you're going to be telling us what makes NABO's investment philosophy unique, especially from the East African financial landscape, because East Africa is very interesting. You have Kenya that has a 4.5 trillion budget. Then you have Uganda and Tanzania that are sort of lacking behind. Then if I'm thinking of investing, I'm Kenyan, but you're telling me to go to Uganda, and then I look at you and I'm like, what do you mean? You're going to be telling us that when we come back from the break. Keep it science and be back shortly. In 2011, Science Media Kenya Limited was formed, and in 2015, we officially applied to the Communications Authority of Kenya to run a television station broadcasting in sign language. Operating on a social enterprise model, our objectives are to propagate social, economic, political, and talent development of persons with disabilities. Uniquely, Science TV has enabled many persons with disabilities to harness their talents by supporting their creativity and by extension reducing discrimination, social stigma, and boosting their self-esteem. 60% of our employees are persons with disabilities. With this talent pool, we have emerged as winners in several international and national awards. We were the first runners-up in the Communications Authority of Kenya 2018-2019 KUZA Awards. 2018 SDG Ambassadors, an award by the UNDP, British Council and ActionAid. 2019 Disability Inclusion Corporate Champion in the Diara Awards, and we also are among the top 50 ranked solutions by the Youth Sustainable Development Solutions Network, and we featured in the Youth Solutions Report 2019, which was unveiled at the 74th UN General Assembly. And in 2020, we were awarded at the Zero Conference 2020 as the best tool to support communications in Vienna, Austria. In 2020, the world was hit by the pandemic and many people were affected, among them persons with hearing impairment, as the usage of face masks and isolation measures made communication an impossibility. With experience in the field, we launched AssistAll, a sign language interpretation mobile application to provide communication between the hearing impaired and different service providers. Post-COVID-19, the application shall be used in higher education, employment, judicial systems, and social settings. Find the application on the Google Play Store. Are you implementing, working, or championing for inclusion? Partner with us to ensure inclusivity in every communication or project undertaken by you. Get in touch with us. The website is www.sciencemediake.com. The email is info@sciencemediake.com. Telephone 0111 980384, or you can find us on Twitter @ScienceTV Kenya. Welcome to the home of inclusion, and let's make communication beautiful.
Are you a deaf person living in Busia County, Mandera County, or the environs? We have exciting news for you. You can continue to access free sign language interpretation services through the AssistAll app. This service is available in several hospitals across the counties. In Busia County, visit Matayo Sub-County Hospital, Kocholia Sub-County Hospital, Alupe Sub-County Hospital, Nambale Sub-County Hospital, Kunyangu Sub-County Hospital, Port Victoria Sub-County Hospital, Sioport Sub-County Hospital, Amukura Sub-County Hospital, and Busia County Referral Hospital. In Mandera County, these services are available at Mandera West Sub-County Hospital, Mandera North Sub-County Hospital, Mandera Central Sub-County Hospital, Kotulo Sub-County Hospital, Lafay Sub-County Hospital, Banisa Sub-County Hospital, and Mandera County Referral Hospital. This opportunity is extended up to 31st December 2025. Don't miss out. Download the AssistAll app today to enjoy seamless communication during your hospital visits. Empower yourself with equal access to healthcare through technology. Visit your nearest participating hospitals today.
Welcome back from that break. Glad you're still watching Science Breakfast with me, Alan Hubbard, and the sign language interpreter is Esther Kendi. In studio this morning, we are having a conversation on stretching that shilling, and this is the segment called Money Matters, and we are speaking to a gentleman called Mr. Njuguna from Nabo Capital. In the first half of the conversation, he got to explain beautifully what investment means, and it does not matter the size of investment that you are making. It can be that 1,000 bob, it can be 1,000,000 bob, or even hundreds of millions where countries get to do such investments. Before we went for the break, we had the budgets that Kenya, Uganda, and Tanzania pass. There is a very huge difference from an investment point of view. Does it impact the investment opportunities?
Thank you. So in NABO, our philosophy is investing with purpose. That every money you are making, every client money you are investing, you see we have a deficit budget. When you look on what we get from the Kenya Revenue Authority versus the budget, definitely the government will have to borrow.
And close to 600 billion this time around.
Yes. They borrowed domestic and foreign aid from IMF, the World Bank, and all the likes. So when you're borrowing locally, what does that mean? It means the government will be issuing what we call bonds, both infrastructure, we call them treasury bonds, both the infrastructure that has a zero tax, and what we call treasury, like FXD bonds that have a tax depending on the duration. There are those that have 15% withholding tax, and there are those that have 10%. These are opportunities that the locals, the Kenyans will partake, include banks, fund managers like us. We invest a lot there. Look at the pension industry. They invest a lot in those government, and you get a return. Yes, those bonds, and you get a returns. Right now, the returns has come down. Last year was a good year for the investor. We were getting. Can see the returns for the treasury bill. The treasury bill, the short term, when the government is borrowing for 1 year and below, they issue what we call treasury bill. If they are borrowing for more than 1 year, they issue the treasury bond. So the treasury bill, the return has gone to 16% last year. This was a good moment. We saw our money market fund rates going up to 17%, 15.5. But now, of course, the government, and even we had an infrastructure bond. The infrastructure bonds mean it is a zero tax bond, where government floated a bond last year about 18.3%. 18.3% zero tax. Crazy if you are to add tax, that would translate to 20% or 21% if it was a taxable. So that tells you, of course, it's not a good situation for the government when you see the government borrowing at those willing to borrow at a higher interest rate, because it means the government is desperate. The inflation was high. The inflation, and this was not just in the Kenyan or African market alone. This was globally. If you look the US, the Fed rates were also going up. They were adjusting up because of the inflation. If you look the European Bank, they were also adjusting their rates up. We call that one monetary tightening policy. You are trying to increase the interest rate to help the locals, the people, to counter the impact of the inflation. But now we've seen the inflation coming down, and the government had to lower something we call the benchmark rate. So the benchmark rate has dropped from 13%. Right now we are at 9.75. This now translates the interest environment. So the interest borrowing, or the cost of borrowing, has also come down. This has also reduced the interest rate on the bank loans. So if you had a loan, most of the banks, they sent notification that they are also reducing the rates, because the government is trying to push these rates down so that now banks can open to the members of public, lend them money,
so that now
they go invest in the economy. Yes. So we call it monetary easing. You're trying to reduce the interest rate so that banks also, if I go to the bank to borrow and I have an investment I want to make, I can borrow at a lower interest rate, and I go and make my investment, and then I can be able to service this loan. Because initially the people were lending now to the government, like last year. If the government can give me 15% on the treasury bill, why should I give Moses or Alan X amount, and Moses and Alan might be a bit riskier? Absolutely. They might default with my money. So the money was all going to the government. So with the deficit budget, there comes opportunities. There comes opportunities in what we call fixed income assets. These are bonds. So the bonds, we are now in the financial year. As we start the financial year, government will float new bonds in the market. So these are opportunities, and these are the opportunities that we now partake. We buy now for our clients. The people who invest in like a fund, one of the fund, we call it fixed income fund. We buy those bonds. Some of them we sell, we buy, and then now we declare the returns. We make a return for you. So there are opportunities, and this goes East Africa. Of course, if you look the Uganda, you look Tanzania, we try to get the securities there. And also Euro bonds. these countries, the African countries, that they are floating the euro bonds, you find that a bond has been issued at a better rate of return of like 10% in the trading in the market. These are good opportunities that we buy for our USD funds. So we buy for a fund that is investing in dollar, we buy that euro bond and it settles there and it gives us better returns for our investors. Of course, because of various factors, there are also challenges when you look on things like exchange rate, where you find our currencies
the dollar keeps on fluctuating.
Fluctuating, and our currencies keep on depreciating. And what are these factors that cause this? One of the things is we are net importer. Whatever we export versus what we import, we import more
than what we export.
The things that we should be exporting, like tea, coffee, pyrethrum, and all those things to give us that inflows, you realize they're not like doing well. So when people, how much are we importing machineries? We are in China. The people in the business, they tell you they are bringing their clothes from Turkey. Phones, they need the dollar, phones, and all that. That puts a pressure on the Kenya shillings because they have to demand for more dollars. So hence that we always, and then the other challenge is in terms of the loans. We have taken loans that are maturing. These loans, when we have a China, we have a loan with the China government, we have a loan maturing from IMF and all that. We need dollar to pay these loans. Sometimes we got this loan when the Kenya shillings was maybe at 120 versus the dollar. Our Kenya shillings has depreciated to 129, 130. So meaning we are paying more. We are paying this loan. Yes, we got it when it was 120. This is the exact money we got. But now our Kenya shillings has lost. So we are forced to go back to our pocket to add more money to pay this loan. So we always in that cycle, and it's not just the Kenyan problem. It's more of what we call emerging market African countries. It's a challenge that we have. So there are opportunities. There are also challenges as well, but we keep on growing and see what is working. And the beauty thing is, like what I've seen the Treasury doing, they're trying to kind of stagger the payment maturities of this infrastructure. If you remember last year, one of the fears that we had was a euro bond that was maturing, I think, in June last year. And beginning of 2024, there was a lot of panic. The government might default on this. What does it mean? If the government defaulted, it means you are not able to pay, your credit rating comes down, and the foreigners start pulling out. Meaning there was what you call capital flight. Money was moving from Kenyan to other advanced economies. So the more pressure on the Kenya shillings. There was a demand for the dollar. If you could go to buy the dollar in the bank, they'll tell you, we can only sell you this dollar, we don't have enough. So the reserves were down. So there was too much pressure, but of course the government managed to refinance the euro bond, and they also issued an infrastructure bond where we saw the foreigners coming to buy this infrastructure bond, and we had more inflows in the dollar, and our reserves went up, and that's what we stabilized. We had gone to 162, 167 versus Kenya shillings versus $1. So we saw that coming down to almost 120, and now we have been there 129, 130. So you can say we are a bit stable now compared to last year, and those interest rates that we are seeing, of course, it means the government it's a cost to the government, because the government will have to pay this. So if they are able to reduce this, it's also that indicates stability in the economy.
Interesting. Before we proceed any further, I want you to dispel and tell us a little bit more about a Eurobond. What is really a Eurobond? Because we hear this word floated everywhere. Eurobond this, Eurobond that. Eurobond eliibwa, Eurobond elikula. What is a Eurobond?
So you see, I said something. When the government is borrowing locally, it issues bonds, domestic. When the government is borrowing domestic, it issues a bond denominated in Kenya shillings. If the government goes to the foreign market, issue the same bond in a foreign market, denominated in a different currency. Mostly of that, and mostly we do dollar. So if we float a bond, let's say in US and all that market, we are looking to raise maybe, I don't know, maybe 100 billion USD. We float that bond there, denominated in dollar. That is what we call Eurobond. It's just a bond issued in a foreign country, denominated with the
a foreign
currency of that country.
Yeah.
So most you find them are in dollars. That is what we call a Eurobond. And why we go that, we are also trying to raise more money globally. So we raise money in dollar. So also that comes to support our reserves. When we say our import cover is 4 months, we are supposed to maintain 4 months. That the reserves you have with the central bank should cover the importation for like 4 months import cover. We say now we are issuing this Eurobond to attract money. So in the process, definitely the money is lost. We say there was a bond that was Eurobond that was issued. It doesn't mean it's there's a confusion that people have that when you say Eurobond, people think it's denominated in euros.
Absolutely.
No, it just means it's just a bond. If we were to take this bond and issue it in China and have it or in Japan and denominate it in Japanese yen, it's a Eurobond. It's denominated in the local currency of that country. If we take it to US and we have denominated in the USD, it's a Eurobond. If we take it to Europe and it's in euros, definitely it's still a Eurobond. So the name Euro doesn't mean it's euros denominated in Europeans. No. It's just the way it's designed. If you're investing, you are placing or issuing a bond in a foreign country denominated in that country, that currency, then it qualifies to be called a Eurobond. So in the process of this money, when we are raising the money coming back, that's where the money we hear that was lost and money was not utilized for the specific purpose, which we have a challenge in African countries, not just the Kenyan alone.
So just to get this right, so basically a Eurobond is ni tumie thao at a larger scale, basically.
Yes, as a country. Yes.
Because now you are playing with the country, you are now playing this game at a higher stakes level as compared to me saying, hey, Moses, niaje, tumie thao haraka.
So that's why when we are investing, one of the fund we have at NAB is called fixed income a dollar fund. It has different Eurobonds. We have Eurobonds for even West African countries. They have issued that bond and we are seeing it's trading globally. We are seeing that it's denominated in dollar. We see the economies. When you are buying a Eurobond, you now analyze the economy of the country. To know how secure this bond looks like, you have to go into the country. If the country is in fights, if the country is in chaos, political instability, it tells you it's not a good investment. It reduces your credibility or credit rating. And we have those we call the Moody's. Moody's is an international credit rating agency that looks in the country and say, well, the way we have seen Kenya in terms of their loans, the loans that you currently have, in terms of how much you are able to generate as from the Kenya Revenue Authority, from the economy development, the growth, we can say Kenya, we can give that loan, that bond you're issuing, we can give it A+. For the AA+ are the advanced economy, the strong economy like US, because also they have the whatever they issue. We can say because of the strength of the economy, we can grade them high. If we realize this country is heading towards default, they even call it junk. They can say this is a junk Eurobond, a junk bond, because there is high risk of this bond might default. So even when you're issuing those bonds out there, the stability of the country determines what the interest rate you give. If your country can default, then you have to offer higher interest rate to attract money. So the country, stability of the country matters a lot, even in the image and credit rating out there.
So what you're basically confirming is that the work of a finance minister is not very easy.
It's not. It's not, and of course the political interference has a lot of influence on that. When someone makes a statement out there, and we have people watching, the representative of the IMF, the representative of the World Bank, all these people, they are watching. What is the country doing? So when we have these things done in a political way, definitely, or statements made and all that, and that's why when you hear sanctions are given to a country, and when you are put into those kind of brackets, definitely it interferes with your the credit rating. How stable are you, even in the global market?
Interesting. We talk about impact investing. How does NABO Capital balance financial return? Because let's not kill each other. Financial returns is why we are in business. But how then does NABO Capital balance financial returns with meaningful social impact?
Okay. One of the things that, of course, there are different approaches to that, and most this is to the, when you look on the countries, they are, like, let's say, talk of the Sharia products or Sharia compliance, the one that invest in the, for Muslims, they restrict where industry you invest, like alcohol, tobacco, and all that, they don't allow. If you are looking now, right now, we have this, we are calling ESG, environmental, social, and governance. That approach of the investment you are looking on, the investment you are making, is it responsible? Is it responsible in terms socially, of environmental, social, and governance? If and that's where we have to be. Right now we have a lot of policies coming into place, like on money laundering, anti-terrorism funding. We have yes. You have to ensure that whatever NABO we are investing, even is a security that we have seen in place, we have to do due diligence. What is this institutions doing behind giving this return? Are they involved? Have they been blacklisted that maybe they have been involved in money laundering? Or they has been involved in something like and that's why when we are in, you come as an investor, one of the things we check is, in the due diligence, we check, are you politically exposed? That doesn't mean a politically exposed person does not invest, but we want to know from the word go, so that if they are involved, there are people we have said no to their money. And not just in Kenyan market. Someone globally is looking to come and invest in Kenya. We do we have those advanced in the systems and softwares. We're able to search and we're able to see this person was involved maybe
scandal here,
corruption scandal even in outside Africa, in outside whatever. Then that's a person you
do not want your brand to be
associated. So we restrict, and most of the things is that the investing with purpose and how we do it and how we see investment, we don't just do it for getting a return. We work to transform people's lives. And the people that have worked with them and the people we have worked together, we've seen transformation. And mostly to create financial freedom. Financial freedom has been our journey. We can say the impact we are creating in the market is to give people financial freedom and to invest responsibly. We don't just invest this money into areas that are that are not within the regulated space by the Capital Market Authority, because we are guided by we are regulated by the Capital Market Authority. The Capital Market Authority gives the guidelines. These are the areas that you invest in. So we are very careful on what we are investing. So we've been impacting in what we may call tangible wealth, creating tangible wealth to investors in a responsible way, and avoiding those areas that are not within the regulatory space and things that are, of course, if anything does not align with our values and the philosophies that we have and the regulatory, we don't invest.
From the aspect of inclusive growth, and of course here we are an inclusive media station, and for example, investing in sectors that support marginalized communities, youth, women, and persons with disabilities. How do you look at that?
Of course, because of the regulatory, and mostly the organization, we are able to work with the organization. How we are able to do this, because as we have to within the investment space, and we are given for everyone, like we have, if someone has a, let's say, tax exemption, we have investment. When we are doing the tax, we have exemption for that. If someone has a disability and has this tax exemption with the Kenya Revenue Authority, their investment does not attract their withholding tax. So they are exempted fully from that. The other thing is, one of the things that we work with, like I have a client of mine who in the memory to remember the husband who was in Samburu community, and he was living there, Mzungu, and he stayed there for many years, and then he was helping the community there. We came up and we sit down with this guy and said, my husband died, but I want to do something with the community there. This community out there, they are doing the camel milk and all that. That's what mostly they do. And told me, can you help me build a portfolio that every 2 months I'll be sending money that is helping the transportation of this milk from the community to the market. And we have done that now for a year and a half, and this has created, we worked on how the mode of transport and the cost of that transportation. So the people there, they just give their milk, is taken to the market, and then they zero cost money on the transportation, and they get their money. And that has also uplifted the lifestyle of those people, the education. That is one of the impacts that we are doing there. And also, as I said, responsible investing. We work with everyone. Like everybody, both those we may call sophisticated investor, that person who feel like just beginning. Yes, beginning. I want to learn more about investment. I want to put something aside. We have a solution for that.
All right. We are almost short of time, and I want us to take a quick break. When we come back, we're going to tackle 3 things. The products that NABO Capital offers, the opportunities for a beginner to be a part of, and what would you consider a good investment for us to invest in? Because I know there are people who are watching and they are invested and they're like, just made some money and I don't know what to do with it. Probably they might reach out to NABO Capital. So do not go anywhere. We're going to be coming back with Mr. Moses Njuguna from NABO Capital. We'll be back after the break.
Are you a deaf person living in Busia County, Mandera County, or the environs? We have exciting news for you. You can continue to access free sign language interpretation services through the Assistol app. This service is available in several hospitals across the counties. In Busia County, visit Matayo Sub-County Hospital, Kocholia Sub-County Hospital, Alupe Sub-County Hospital, Nambale Sub-County Hospital, Kunyangu Sub-County Hospital, Port Victoria Sub-County Hospital, Sioport Sub-County Hospital, Amukura Sub-County Hospital, and Busia County Referral Hospital. In Mandera County, these services are available at Mandera West Sub-County Hospital, Mandera North Sub-County Hospital, Mandera Central Sub-County Hospital, Kotulo Sub-County Hospital, Lafay Sub-County Hospital, Banisa Sub-County Hospital, and Mandera County Referral Hospital. This opportunity is extended up to 31st December 2025. Don't miss out. Download the Assistol app today to enjoy seamless communication during your hospital visits. Empower yourself with equal access to healthcare through technology. Visit your nearest participating hospitals today.
In 2011, Science Media Kenya Limited was formed, and in 2015, we officially applied to the Communications Authority of Kenya to run a television station broadcasting in sign language. Operating on a social enterprise model, our objectives are to propagate social, economic, political, and talent development of persons with disabilities. Uniquely, Science TV has enabled many persons with disabilities to harness their talents by supporting their creativity and by extension reducing discrimination, social stigma, and boosting their self-esteem. 60% of our employees are persons with disabilities. With this talent pool, we have emerged as winners in several international and national awards. We were the first runners-up in the Communications Authority of Kenya 2018-2019 KUZA Awards. 2018 SDG Ambassadors, an award by the UNDP, British Council, and ActionAid. 2019 Disability Inclusion Corporate Champion in the Diara Awards, and we also are among the top 50 ranked solutions by the Youth Sustainable Development Solutions Network, and we featured in the Youth Solutions Report 2019, which was unveiled at the 74th UN General Assembly. And in 2020, we were awarded at the Zero Conference 2020 as the best tool to support communications in Vienna, Austria. In 2020, the world was hit by the pandemic and many people were affected, among them persons with hearing impairment, as the usage of face masks and isolation measures made communication an impossibility. With experience in the field, we launched Assist All, a sign language interpretation mobile application to provide communication between the hearing impaired and different service providers. Post-COVID-19, the application shall be used in higher education, employment, judicial systems, and social settings. Find the application on the Google Play Store. Are you implementing, working, or championing for inclusion? Partner with us to ensure inclusivity in every communication or project undertaken by you. Get in touch with us. The website is www.sciencemediake.com. The email is info@sciencemediake.com. Telephone 0111 980384, or you can find us on Twitter @ScienceTV Kenya. Welcome to the home of inclusion, and let's make communication beautiful. Back from that break, glad you're still watching Science Breakfast with me, Alan Herbert, and sign language interpreter is Esther Kendi. Boy, is the conversation interesting, because we are talking about money and stretching that shilling that you have got. This is Money Matters. It comes to you every other Thursday, and this morning we have Moses Njuguna from Nabo Capital, and we are talking about issues to do with the matters. It comes to you every other Thursday, and this morning we have Moses Njuguna from Nabo Capital, and we are talking about issues to do with the money, investing your money in places that it can grow. So, Mr. Njuguna, over the break, we spoke about so many things.
Yes.
We are short of time. I don't know how much we are able to cover.
Yeah.
Before we proceed so far, the previous conversation Nabo Capital offers, which are the products that Nabo Capital offers?
Okay.
Yeah.
Thank you. Before I tackle the products,
yeah,
our way of investing, we try, as I said, investing with purpose. Before I go to the product, first of all, I understand the client's needs. When I sit down with you and I know this is
like the
what...
example of the lady that you...
Yes. When we start, you see, if I could have given her money market fund, maybe it could not have worked, because she needs this payment and she needs a level of return, and the level of risk you have also to check. So we do a bit of what we call, we listen to the clients, evaluate their needs, and recommend a solution. And in recommending this, we have come up with 4 portfolios which we believe works for our investors, and this is informed in something we call Maslow hierarchy of needs, where we say, as a beginner or as a human being, you are concerned first of all of your what you call physiological needs, basic needs: food, shelter, clothing. The next thing, once you take care of that, you go to security. Security, you think of my income security. Where do I stay?
Secure your house,
I secure
your children's education.
That's the thing.
Yeah.
Then you move from there, you go to where you talk of the love and belonging. Love and belonging, you know, who are the people who love me? Who are my family? Who are the, you know, then you go to what you call self-esteem. What is my position in the society? Then you go to the self-actualization.
Now that is the generational wealth.
Generational wealth. How do I tackle How do I address this maybe in challenges in the society? How can I impact the children who don't have a good education and help them achieve that? So from that we came up with 4 portfolios, and one of the portfolios we call it lifestyle portfolio. Lifestyle portfolio is whereby you are building an investment. This investment is supposed to address your basic needs, food, clothing and shelter. If today when we say you have 2 types of income, first income is what we call active. I work between 8 to 5. I'm getting paid. I'm using my time and my skills. I'm paid active income. The other type of income is passive income, where I've invested money. The money is generating an income for me, even when I'm sleeping, even when I'm not engaged. The passive income, that one you have control. The active income is determined by the age or how strong you are. When you hear some
skills that you have,
that's some of the skills you have. But the passive income is determined by how much are you able to set aside and invest. So we say, build a passive income. You know how much you use in a month. If you spend 100,000, if you spend 50,000, if you spend 200,000, build a portfolio that can give you a passive income that can cover basics. And then you can start saying you are on the right direction towards financial freedom. The number 2 is what you call security portfolio. Security portfolio is you want to own a home. How does that look like? By when do you want? Can you build a portfolio that can help you own a home at a given point of time? Of course, there's always, in the investment I talked about time. You can't achieve it right now. Time is very important. You have to think of how long do I want to own this home. Education is a project. When you talk of the children taking it from grade 1 or from playgroup to university,
wherever they
go, it's a project. You're talking of 18 years. How have you planned that? You can build an education portfolio. So we call that one security portfolio. You are trying to secure, including your insurance needs, insurance premiums. Have you covered yourself? Have you covered your loved ones? Because if you are creating wealth and you have not covered, maybe your parent is not covered, and you always support them. In case one gets sick, they will interfere with your journey of wealth creation.
Absolutely.
Then number 3, we talk of aspiration. Aspiration portfolio, this is the wants. These are the things you say. By the way, when I have money, I want to own a holiday home. I want to join a membership club. This membership will cost me 1 million. I want to buy this good car. I want to travel the world. I want to, that's a goal that you have. But you can't do that when you have forgotten security and lifestyle. And that's the problem we have with most people. They are living kind of aspiration lifestyle out there without having secured their lifestyle and their security, their basics, there. Hence, once they lose their income, like the time of COVID, you saw people moving from high-end estate to where their pockets, where they could afford. So we say, build the security portfolio, lifestyle, and then now the last one we call it, now after aspiration, think of legacy. Legacy portfolio is where we talk about multi-generational wealth transfer. After you've worked all this time, how have you planned that whatever you are building will be transferred to the next beneficiary? If you're not there, things happen. You're not there tomorrow. How is your family secured? Does your family understand what you've been building? Or they'll be left to try to figure out what was you doing with this investment. So we help people. Yes, that's the thing. We help people to build a legacy portfolio and even coming up with a family trust. Having a family trust where you have the beneficiary indicated, these are the securities, and appoint a fund manager to do for you. So those are some of the portfolios that we have. When you come now to the funds that we offer, one of the funds that you help us to offer those liquidity, if you're looking for something short-term and liquidity needs, you want something that you want, maybe you have even a project, I want to put this money for 1 year, this money to earn some interest compared to the bank, we offer money market fund. Money market fund will give you between 11 to 12%, currently between 10 to 11%, has a compounding interest. One of the things that anytime you're investing you need to check is compounding interest. It is compounding the interest, and then you have the accessibility of the money. In case I have a need, I can always access. And we have other funds, we call them fixed income fund, that invest in bonds. Money market is both in Kenya shillings and the dollar. And then for the fixed income fund, still it has a Kenya shillings and the dollar. For the Kenya shillings, we are doing around 13%, which has a compounded interest. It gives you the stability. In case someone is retiring and says, I have this X amount, I want to be paid an income every month. you can put in this fund, and every month you have a X amount, depending on the size of the investment you do. There are people I pay 100,000, there are people I pay 1 million, depending the size. Of course, their portfolio are big, and every month this money goes supporting. Maybe they have education needs, they have some project they are doing, and even their lifestyle. It helps them to achieve that. We have other funds like Kinabo Income Fund, where you are able to commit for like 1 year, and you're able to get returns of 15 to 17%, and other opportunities that always keep coming. Like last year, we had opportunities that are giving 19%, 20%, but this comes after assessing your needs and be able to sitting down with you and able to know this is a suitability. There's something we call suitability of the solution I'm offering. I know, Alan, this is what works for me, this is what works for Moses, and this is what works for the other person. So when I do that assessment, I can tell this is what you want. So that's the kind of the offerings that we have, but mostly we call it investing with purpose. Have a goal. Why are you investing? Are you just setting aside money so that you don't eat that money? You know, there are people just say, I've invested, I put money aside. So have a goal for that, for your money. Put a purpose and a goal.
They say if that money is not enough for investing, you keep that money.
For me, I say, not every money is enough for investment. Even a 1,000. We have a platform, we call it Chums. Chums is our online platform. We have partnered with them. There you're able to invest even 1,000, 1,500 shillings, and you grow that, and you're able to monitor on phone, and you're able to move. Of course, our investment, we have other investment like money market fund from 100,000, 200,000. But even with the Chums, you can start lower, keep on growing,
compounded,
and then you keep on monitoring. And investment is not something to invest and forget. People say, I invested and I forgot. No.
You keep on it.
You can't handle investment as a side hustle. Investment is it's a main thing.
Be active there.
You have to be there. You have to know what is Moses doing. When you send a statement, how much did I earn? If you already invested in somewhere, can you go back in your statement and see how did you perform last year? And then set a new goal. This year I want to make maybe a 1 million return in a year. Or I want to make 300,000 in a return. So it's something that you need to engage. It's not something you say, I put money and I forget. You forget, then the returns, they drop. You don't know. So that is a journey and that's why we have investment advisors where we talk with, and that's what I do. I'm a private wealth manager. I manage portfolios for my client, and every month we report to them, and this is what we are making the returns we make them, including with the team that I work with.
Interesting. Now, I have 1,001 small questions. Let's see if we can tackle all of them. You've spoken about stocks. You've spoken about bonds. You've spoken about euro bonds. With an understanding, I can also, if I have the muscle, I can also invest in a euro bond. We've spoken about the guys who are doing what they call what is it? The
forex. They say forex is the famous.
The famous forex trading. Where, as a beginner, could you demystify some of these opportunities that have been flaunted in the market as opportunities for investing?
As a beginner, one, you need to understand what you're investing in. What is the underlying assets? And the other thing is the safety of your money. Because if you lose that initial money to invest, you get discouraged and you never invest again. That's why people say, I'll not try investment. And the other thing is, check, is this person offering this regulated by the Kenyan Capital Market Authority? You go to the website of the CMA, there's a somewhere called list of licensees. All the institutions, including Nairobi Security Exchange, fund managers, stock brokers, all those who are in the market, they are listed there. So that in case something goes wrong, you know who you can reach out. The same way we have SASRA for SACCOs. You have a SACCO, can you check that SACCO whether it falls under the regulator? Is it under the regulator? So that in case of something happens, you can be able to go to the regulator. So that's the first thing, check with the regulator. Is this person offering this under regulated? Two, how can I access my money? I've invested. In case I want my money, how quick can I get my money back? You know? And the other thing I said is the underlying assets. If I'm coming and tell you, Alan, I'm going to give you 20%, I'm going to give you 50%. What is this that I'm investing in that I need your money to make for you the 50%.
Oh, we know there is the black market. There is the black market. So probably.
Of course, you have to, they are what we call benchmark. When we talk of the bonds, we have what we call African Bonds Market Index. What does that indicate in Africa? The bonds are yielding. If I look on the stocks, I check on things like the Morgan Stanley, whatever, the index funds, the index NSE 20. I go and check how is the NSE 20 trading. If I'm looking in the US, I'm looking on the New York Stock Exchange. How is that doing? The Dow Jones, how are they doing? So that if I'm investing, if I'm coming to tell you I have an ETF fund, or I'm investing your money, I'm going to make your money rich, I'm going to make you rich with the multiples or whatever, I check what are the benchmark and what have you invested in. And that's why we have people talking of the Forex. The Forex we know, and Forex is not a new thing, the way people are hyping it. It's been there. Forex has been in the banking. It involves
what is Forex trading, by the way?
Forex trading, and the banks does this in what we call treasury. The banks, they even as investment, we have what we call the treasury. This involves buying one currency. It involves buying one currency and selling it and making, you see what we talked about, Kenya shillings dropping value against the dollar. Depending on where you are, you make a return and the other person make a loss. So you take a position. If I buy Japanese yen, or I have a Kenya shillings and I have a dollar here to bring it locally. If I'm holding a Kenya shillings and my Kenya shillings strengthens, becomes stronger than the dollar, I gain. If I bought it when it was 129 and now the Kenya shillings is maybe trading at 125 versus the dollar, it means my Kenya shillings are strengthened. If I sell it at that point, it means I'm gaining against the other currency. But in case I bought this currency and then it loses value against the other, because you pair. You pair. If you always see the market moving euros versus a dollar. So if I'm holding the euros and the euros have strengthened, I can sell at a higher margin and get an income. It may not be so much, hence the requirement of that trading its volume. And actually Forex market, it's the biggest market in the world. When you talk of the Forex, the trading, we have for the stock equities, we have for the bonds and all that. Forex is the biggest market in the market, and that's why you try and see currencies movement. Of course, to do it, one, you also need to have a license from the central bank. And the banks does that. The other thing people will talk about is the cryptocurrency. Of course, the way they put it, you're kind of trading from one the coin to the other. You're able to gain from this. Maybe you have Ethereum, you have whatever. You're able to buy this and see how much you are gaining. But that market also, people have come up in ways that are just putting it as a Forex. I have made millions from the Forex. It's a very volatile market. It's a market moves in seconds. They keep on moving. You have to keep on, and you have to have software. To track this, you have to have software monitoring. You have to put stop losses such that if my currency is dropping, I sell. You have to know, yes, it's what we call hedging. You take either long in the investment, in what we call financial engineering, we call it, you are either taking long or short position. If I'm taking long position, I'm buying. I'm doing short position, I'm selling. So if you take those positions and the market moves against you, you make a loss. So it's algorithms. There's a lot of algorithms, and sometimes the algorithms fail. So your money can be wiped in a second. So that's why I say
example of what Donald Trump did to the world. During those trade wars with China.
That's the thing. In a second, you realize. So any investor, if you're going to the investment and it's your first investment, someone tells you it's a Forex, I'll tell you, you need to slow down. Start in something you understand. Start in something that preserves your capital. As you move and becoming a sophisticated investor, then now you can consider. And don't just put all your investment there. Have, the way I said, diversification. Don't put all your eggs in one basket. Have something in something. There's something we call like 40% have it invested. Depending on your age, if you are young, you can take more risk because you have time to recover.
Time to recover, yeah.
So you can put a bit of equities, like stocks. We define them have some level of risk. You can have some portion of that, and other portion in what we call fixed income. Fixed income, these are one, they preserve your capital. They have a determined period of time. Then as the age, maybe you're at 40 or you are heading to now 50 to 60, this is the time to reduce the risk appetite. You need to preserve most of your portfolio exposure. Maybe 80% should be in something that preserves your capital. You have 20% for growth. And as you retire and you know this is where you're depending, move to something you are depending. But of course, we have those capital investors, the biggest people, like we had the late Dr. Chris Kirubi. These are people who hunt for opportunities. And because of their portfolio size, they're able to take huge risk. You hear they are the movers in the security market. We have the likes of Monga, the likes of whatever in the market. These are the people who are able to move the market and make huge margin. But me as an individual, I'm starting off. I may not have that muscle.
To compete with the big boys.
Yes. I've taken my steps, my calculated risk, and work with an advisor. And that's why we need the way you have a doctor. You say, I have a family doctor, I have a family lawyer, I have my mechanic. You also need an investment advisor. We ignore that part and we assume I know about money. Money is about we ignore that part.
Besides to get forex right, so what you are saying is that there is money to be made in forex trading. But you have to have voluminous amounts of money for you to make margins.
Definitely.
So what these young boys are doing on the internet is probably totally different business that isn't forex trading.
It's different. It's a name. They're putting a name.
They are basically finding a face for what they're doing.
And then they come up with a lifestyle, the life of a forex trader. Someone is doing those because behind as a forex trader, there are days you have made, there are nights you have not slept. There are days you have made losses.
Monitoring the markets.
Monitoring the market. And you have system. If the algorithm sell, you are making a loss. You know, it's a very high risk. People make returns. Yes, they make a return, but of course not the kind of the hype
what we are seeing on the internet. So there are those who also say that they trade gold and oil prices. How, in a nutshell, how does that work?
Those one we call them derivatives. Derivatives. And it's a huge market. Derivatives trades in commodity. If today, and this is one
so that's where NFTs also come in.
Yes. You remember there was a time Kenya Airways made a loss, and Kenya Airways went and made there's called future contract to buy oil. I think was it Kuwait or which country? You put a contract and say we'll be buying oil from you people, even if the market prices change. We are signing a contract that will buy for you, and then they signed a certain price. Then a market price globally, world market of the oil dropped.
They tank.
So they had to buy at the cost they indicated. So you are making loss because you can't go. So they are in the derivatives. We have what you call futures. We have forwards. We have swaps, and we have futures, forwards, and options. Options, these are different types of the contract, and you say, I am trading my wheat, or I am trading my oil, I'm trading my gold. Hey, I'll take which position in the market. Either I take, if I get technical, we say either long or short. If I take a long position, I want to sell my wheat, which is I will harvest in 6 months time. So I sell a contract in the market, people buy that contract, and in 6 months time, I'm creating a market for including coffee. We have one futures market for coffee, and we even have a derivative market in Kenya that is trading for like Safaricom shares. I think there's some bank, EABL, I think it's there, the security is trading. So you trade that in the market. So it's another alternative investment. We call them alternative investment. Derivatives, it's a market on its own. It's those emerging. When you talk of even the real estate right now, it's changing. Instead of me owning an apartment, I can own a portion of this building. I get an income, something we call a real estate investment trust rate. When you hear there's an I rate, there's a D rate, maybe we are coming together, we are putting money to do a development. Then once that development is done, we'll get a rental income. So these are new emerging trades, and we are embracing them. The market is taking time to embrace this, but in the advanced economies, they have been working. They are just ways of managing risk. If they even what we call currency swap, where if I'm receiving dollars in this year, and I know maybe the interest will change, whatever, I can take kind of a swap to be paid at this level to avoid what we call currency risk, currency moving and changing. Yeah.
Now, this is what we're going to do, because this is interesting, exciting, and a lot of information. Kindly help us commit when the viewer are watching that you're going to come back and we're going to have a more in-depth discussion around all these investment opportunities, because they're so far and wide, and we cannot exhaust all of them at a deeper level in a single sitting. But as we're winding up, give our viewer 3 tips on what they can what they can start doing now, 2, what they should stop doing, and 3, what should they start thinking about as the future of making passive income.
Thank you. 1, you need to do what we call budgeting. Get to know your expenses. Get to understand where does your money go. Even look on your expenses, and it will tell you your interest and where your money goes. Check how much, because for you to invest, you need to have that what we call have an audit of your lifestyle, an audit of your money, and know where does your money go. What are the values, the things you have. So the first thing is do a financial planning, do a budget. Get to have a budget that allocates the money. The other thing is set a goal from where you are, and this involves go and check what are the assets do you have. What are the liabilities do you have? Do you have loans that you have accumulated? What type of loans? What are the nature of those loans? How much interest are you paying on those loans? Go do that assessment and realize, are you on the healthy side, or are you on this side of taking loans? Because there are people who are sunk in debts. They are taking debts to service another, and that should be another topic we can handle here, to educate people on debt management. How do you handle these debts and all that? So do that assessment. The other thing, set a goal. Where do you want to go in terms of your wealth, in terms of your investment? And then number 3, investment. Start simple. If you have not started investing, start with a money market fund. Get started, and as with the time, get to learn about the market, get to know about the opportunities, and make sure you're investing in a regulated market space. Visit the capital market website authority, check the offers, the people are offering, and you see NABO, visit as NABO. And the other thing I can tell people, watch our YouTube channel, NABO Capital. We have a lot of investor education there. These discussions, we do them, we educate people, get to learn about the market, how they are doing before even you start investing.
Amazing. Questions keep coming up. Money market fund and starting a small business. Which one would you advise as you're giving your closing remarks as well?
Wow. That's a lot. You're starting a business and you want a money market fund.
Not necessarily. Let's say I have 10,000. 10,000, I was about to use a mask example, but we had a sad story of a young man who was short selling masks. But I have 10,000. Say I want to start selling shoes. All right. Of course, I have a small following on the internet, so I can go buy the shoes, do the advertising, and sell those shoes. And there is an option also of putting my 10,000 in a money market fund. As somebody who is beginning, what would you advise me to do?
What I will say is, this is a business opportunity where you want to be involved. Maybe it's an income generating opportunity for you. Start that opportunity. From how much you are making, set aside. You can say, in every 100 shillings I'm making, that shillings will go to my money market fund. Money market fund, you are putting that money for saving, like you are setting aside for investing there. You are earning a small return, and this can help you to even expand this business. So as you are working with your 10,000, you know this, you put even 1,000 aside from the profit you are making. You have expenses. Whatever you put aside, this portion of that, leaves another income you are building. You are building another what you call passive income, and this will come along in expanding this business. So don't spend everything. So I'd say start that thing you feel that can work for you. Of course, assess the risk level, just to understand that where you lose the money. Just assess. There's always a risk, and then whatever you have put aside, if you have enough, you can divide, have something invested like in a money market fund, the other one in the business, then balance that.
You're a good investment manager and advisor. Others would say, no, just bring your money this side. But thank you very much, guys, for holding up until the end of this conversation. That has been Mr. Moses Njuguna. And I hope that we'll have an opportunity to host him again, because there is a lot of things to debunk in this issue of investing money and stretching that shilling, because we want you to grow your wealth. We want to stop these conversations that those are born from a well-off family. We should also come from those well-off families. And if we are not from well-off families, we should be the people who build those well-off families for our children. I've been your host, Alan Hubbard. Sign language interpreter has been Esther Kendi. Let us see you tomorrow as we usher in